The stock market is extremely close to its low of the entire year, and it was another red day. In this video, we're going to talk about why the stock market dropped again today and important things you need to know with stocks at these levels. We're in crazy times right now. Volatility is increasing, and honestly, it doesn't look like it's going to slow anytime soon. So, Tom, let's get right into it.
Yeah, Mike, it was a crazy day. Initially, stocks actually did pretty well early on in the morning. Stocks like Tesla, Apple, Microsoft, and stocks like that were really ripping up, and it started pushing the SPY and the QQQ even higher. But then as we started to get into the middle part of the day, that volatility to the upside started really slowing down, and we caught some pretty bad downwards momentum. And right before close, SPY started selling back off toward its low of day down there around 363. And like you said, Mike, we are getting really close to that low of the year on the SPY. We can see that low of the year is right around, you could say like 362. So hopefully we can hold this. But honestly, Mike, I would not be surprised if we started to break it. I will say I do still maybe expect a couple green days to trickle into the market here. But nonetheless, it was a bad, bloody day again. We did have some stocks up in the green, though, like Win and LVS with some good news. But other than that, the only stocks that were green were stocks like Amazon, Tesla, Apple, stocks like that. But you can see towards close, they started really selling back off and almost went red.
For sure. So there's a couple reasons, or actually a lot of reasons, that the stock market is doing what it's doing. I would say lately, though, some of the bigger reasons has to do with the US dollar index and then also interest rates. Basically, the dollar has exploded over the past year, and it's really a bad thing for especially US companies that have a lot of business overseas, because when the dollar rises, especially in such a rapid pace like we saw over the past year, it makes dollar denominated products a lot more expensive compared to other currencies. And that's just one aspect of a rising dollar. But the main thing is, like, when we have the dollar rising this much, this quickly, it's not a good thing. And unfortunately, the dollar's increase has not slowed down at all.
Yeah, it really hasn't. If anything, it's even been more accelerated recently. Even like look at the past 2 days on this daily chart. It's just been seriously ripping to the upside, and we're seeing big jumps out of rates. The 10-year yield hit 3.9%, the highest level since 2010 today. I feel like they just keep making records every single day as we go, Mike, and that dollar is not helping those yields either. So here's the US 10-year yield. And you can see that is really flying up as well on this daily chart, getting very accelerated. It did seem like, Mike, a couple weeks ago or a couple months ago, we were actually going to maybe start to fall back down. But, you know, the market started falling back again. And then obviously these yields kept ripping. And I know Powell and all the FOMC meetings and interest rates rising and stuff like that is playing a big role as well. And it's just it's obviously causing a lot of bad volatility in the stock market. You know, I did say at the beginning of the video, some of those bigger stocks like Apple, Tesla, and stocks like that closed green today, which was true. But, you know, a lot of these growth stocks really fell down today. Like Plug had a terrible day, and AMC was down 14% somehow. I mean, that's one of the worst days on AMC in a while.
Yeah, and then I just want to go back to rates just for 1 second, Tom, just so everyone could fully understand what's going on in that front as well. Tom mentioned that interest rates, at least the U.S. 10-year treasuries, are towards highs of what, like since 2010, Tom? What is
Yeah,
it?
2010, according to CNBC.
Perfect. So basically, the reason this is a bad thing is because let's say we have the US 10-year treasury yield at 3.9%, or even if you went to the US 5-year treasury yield, which is currently at around 4.2%. Basically, investors are going to say, all right, I can get a guaranteed 4.2% return on my money every single year for the next 5 years. Or I can invest my money into some stocks and maybe I'll get higher than 4.2%. Maybe I won't. You know, there's a lot of uncertainty. So it's like when you have treasury yields, especially rising so quickly and so much, basically it draws capital out of the stock market into, you know, the fixed income market. And then on top of that, even if it doesn't necessarily draw I guess you could say for the capital that it doesn't draw out of the stock market, it hurts current valuations of companies that are expected to produce a lot of cash flow and profit down the line. So, main thing to know, interest rates have been booming and it's not good for stocks.
Yeah, and Mike, the first thing that I would think of, seeing these interest rates so high is I would think in my head, well, can't I just buy a stock that pays a 4% dividend and then maybe just wait it out that way? But the thing is that these dividends are always changing. I know that these rates are changing too, but you obviously get locked in when you buy these bonds. So it's pretty crazy, Mike, the way that the dividends kind of work on stocks. And some of my favorite dividend stocks only pay like 3%. So for these to be all the way up around 4.3% is just insane. And look at where the 2-year bond started the year at. We started the year at 0.75%. Like whenever that was at 0.75%, obviously then a lot of people would just rather go into stocks and probably buy up some good dividend stocks, like maybe like Campbell's Soup or Coca-Cola or stuff like that. But now that this is so high, I mean, it's higher than a lot of dividends are paying out. It's kind of crazy.
Very true. Now, one thing that you do miss out on with the bonds is, with the dividend stocks, you can also have the price appreciation for the stock as well. But, then again, with the treasuries, they're guaranteed, so there's a lot more safety in them. But there's a lot of give and take. But keep your eyes closely watching bonds over the next couple days. Tom, but what else do we have going on in the market?
Yeah, it was a pretty crazy day overall. And I know this isn't necessarily market related, but we've been talking a lot about rates going up and inflation and everything like that. And the Congressional Budget Office just said that Biden's student loan relief could end up costing $400 billion, which that is just a huge number. I cannot believe it's going to cost that much. And the Congressional Budget Office is no joke. It's not like this is Fox News trying to spin this against Biden or something like that. This is a pretty big, obviously, I guess I don't know how to even describe them, Mike. A budget office, I guess you could say, but they're very respectable, and it's not like they're going to be like it says here, nonpartisan agency that calculates the cost of federal revenue and spending plans for Congress. So it's not like it's some random company or some random institution saying this. It's a very respectful thing, Mike, and that's just a lot of money. $400 billion at a time we're talking about inflation going up. I go look at like the U.S. national debt. $400 billion is like almost 1% of the debt. It's kind of insane to even say.
So yeah, it's interesting how we have the student loan forgiveness in a time where we're trying to slow inflation, and then also, the midterms are coming up and all that good stuff. So interesting stuff there. But yeah, good stuff. What else do we have going on in the market?
All right, so something more interesting is we actually have these casino stocks like Wynn, LVS, stocks like that are really flying up. Like Wynn today ended up going up 11.99%. You can see though, Wynn is all over the place, so keep that in mind. But today they had a very big jump on some fantastic news. So Macau is actually going to be reopening tours from China, which is amazing. And Macau, if anybody doesn't know, is the gambling, it said right here, the world's biggest gambling hub. And I know because China is so large, there's so many people there that so much money flows through this area. And LVS and Wynn were the main two that benefited from this. More stocks did as well, but those two stocks are the main ones I saw. And this is actually what Macau looks like for anybody interested. It looks an awful lot like Las Vegas, Mike. It has very shiny things on there, and like this almost looks like the circus lights and stuff in Vegas. So very interesting. But like it says there, gaming hub of the world. So that's kind of big, Mike. And Wynn and LVS had a big jump from this. Who knows? Maybe this is what they need to start to kickstart a nice uptrend again. Because look at that rough daily chart.
Yeah, we'll see. So many stocks over the past year got destroyed, and Wynn and LVS are definitely no exception. They took a beating. So it's nice to see them pop up on this news. They are a couple of a very select group of stocks that were actually in the green today. So keep them on your watch list tomorrow for a potential continuation play. But Tom, besides that, I think we're ready for the momentum plays. With the first one, we have AMZN or Amazon to the downside.
Yeah, poor Amazon there. They had a pretty good intraday support. I see right around 114.75. So if they break below 114.75, then try to scalp those puts.
Right, with the next one, we have Tesla, also to the downside.
Tesla, poor Tessie. You know, this one might have been to the upside if it wasn't for that end of day drop there, but go ahead and make them break down below 274.50.
Alrighty, with the last one, we have Intel, but to the upside.
Intel, come on, Intel. Let's go up tomorrow. Go ahead and make them break out above 27.25.
Alright, so we're watching Intel for potential day trade to the upside tomorrow, only if it breaks above the level Tom listed. And then we are watching Tesla and Amazon for potential day trades to the downside tomorrow, only if they break below the levels Tom listed. But before we move on, if you guys like our videos, make sure to subscribe. We post brand new videos every single day. And then also we want to give a giant shout out to today's member of the day in the Stocked Up Discord chat, Xbox Fanatic. You're pretty new to the chat. You've been pretty active today, so definitely keep it up. We appreciate your activity. But Tom, do you have any last minute things we need to know about or anything like that?
Yeah, I don't think there's anything too crazy. There was a little bit of news with Walmart entering the metaverse today. I don't think this is making or breaking anything for Walmart. They are kind of launching something on Roblox. I will say I actually got on Roblox to see what this was. And trust me, guys, I don't play Roblox. I only made an account just to kind of check it out. But yeah, it's kind of interesting. There's just like a little Walmart world on there. Honestly, it seems like something that's for really young children and stuff. So, you know, I don't think it's going to really make or break anything for Walmart, but I will say it did kind of boost up Roblox today, which was interesting. They had some pretty good pops early on, so maybe keep them on the radar too.
Right, well, thank you guys so much for watching today's video. Don't forget to subscribe, and let's have a great week.